Okay, good morning. Welcome to PowerFeed TV, brought to you by Chaikin PowerFeed, your daily market digest. Happy Friday. Today is Friday, May 4th, 2018. I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. You can find me tweeting at DanRusso_CMT on Twitter. And as always, PowerFeed TV is brought to you by Chaikin Analytics. You can get your daily Chaikin Power Feed at www.chaikinanalytics.com/PowerFeed TV. So let's jump right into it. U.S. equities were mostly lower in Thursday's trading, although there was a big rebound at around midday. Healthcare and financials were the worst performers, while materials and technology led the way. Treasuries were firmer across the curve. The dollar was weaker against the major crosses, those being the yen and euro. Gold finished up 50 basis points. WTI crude settled down 70 basis points. Tesla traded off nearly 6% following what could only be termed as a dramatic conference call the previous evening. Elon Musk, the CEO of that company, cutting off Wall Street analysts during the Q&A session. Does happen from time to time, and it's usually not an encouraging sign for investors. Other earnings moves included Abiomed, THS, and VMC. VMC really helping push the materials higher. Losers, Cardinal Health was down over 20%, NXPI on the semiconductor side, and AIG within the insurance space. Insurance has been a tough spot within the financials group. As always, let's kind of look at our key levels. Support comes into play at 26.15. That is the rising 200-day moving average, which was once again respected yesterday. Below that, 25.81. The February 8th close, 25.45 and 25.33. Those were the extreme lows of this consolidation so far. Resistance pretty well defined, 26.58 to 26.75. This zone has been respected over the course of the past week and a half. Above that, 27.10, where we returned back about 2 weeks ago, and then 27.41. So if you are bullish, you want to see us incrementally take out these resistance levels, get above 27.41. That would break a downtrend line. That would give you an indication that the secular bull is resuming. If you are inclined to be bearish, obviously you want to see a sustained probe below the 200-day moving average. 200-day held once again yesterday, and then you want to see us start to undercut these lows, in particular the February low back here. That could give you conviction as a bear that the secular uptrend is in fact reversing. As always, let price dictate. We are still consolidating. My view is that the consolidation is taking place within the context of a secular uptrend. As we said, the S&P 500 held the 200-day moving average once again. Something interesting to me, something I'm keeping an eye on, semiconductors, they are seeing some relief relative to the S&P 500. I look at the relative performance of semis to the overall market as a barometer for which way the S&P 500 is likely to go. We'll get into that a little further later on. Non-farm payrolls expected to add about 195,000 jobs in the month of April. I wouldn't be surprised to see March be revised higher. Unemployment rate expected to tick down to 4%. Futures are slightly lower or pointing to a slightly lower open today. Getting into the major indices, we use the power bars to give us an indication of potential future direction. And according to the Chaikin power bars, large cap stocks are more bearish than small cap. That's a theme that's been ongoing. The major indices are mixed, hence we stay within a consolidation. Dow slightly skewed to the positive, 6 very bullish or bullish stocks for 5 very bearish or bearish stocks. The S&P 500 skewed negatively, so is the NASDAQ. Small caps have been bouncing back and forth between a positive skew and a negative skew. They do have a negative skew now, but as we said, their ratio is better than large caps. Bonds, as we said, did see an uptick in price yesterday, pushing the yield down to about 2.94% on treasuries. I do think the path of least resistance is higher for the 10-year treasury yield. I would not be surprised to see us take out 3% once again and move towards 3.2%. So every day, Chaikin Analytics Power Feed subscribers will receive a stock of the day. And today's stock of the day is Baidu, coming to us from the computer software services side. I think if you're not familiar with who Baidu is, you can think of them as the Google of China. Stock closed last night at 252.46, up over a little over percent. Chaikin power gauge rating is very bullish due to strong financials and earnings performance, very strong technicals, and very positive expert activity. Baidu, certainly a name you want to have on a watch list on the long side. Let's take a look at the chart here. Very bullish power gauge rating, strong trends within a strong industry, so that all looks compelling. Beyond that, let's read the chart from the bottom up as always. The ribbon here tells us that the power gauge rating is bullish or very bullish. We have very bullish. Importantly, relative strength versus the SPY. Kind of a change of character here. Let's keep an eye on this. Had been underperforming since December, and now we've pushed to the upside. You can see back late summer, early fall, when the stock was outperforming the SPY. Absolute performance was strong as well. Then we kind of fell into this consolidation where the stock was lagging the SPY. Now we're outperforming again. Market agrees with the model. However, we are overbought in the near term, so maybe we want to give the stock some time to settle in here, wait for this indicator to get to an oversold level while money flow remains positive. Stock kind of hovering around the long-term trend line. Baidu certainly looks interesting as a name to have on a long idea watch list. However, from a tactical entry point, I think I want to see this overbought, oversold signal closer to oversold before I want to pull the trigger for a trade on the long side. Moving over to the sector tracker, sector movement over the last 5 days, you can really see the defensive posture here with real estate, the best performing sector over the past 5 days, and utilities within the top 3. Technology, some of the FANG names have been doing well. That's driving tech higher. On the bottom side, consumer staples, been an absolute disaster throughout this earnings season. Indicative here, sector down 3% over the last 5 days. Healthcare, a lot of earnings-driven names moving lower. They are the worst of the bunch over the course of the past 5 days. So let's keep an eye on those sector trends. The industry focus for today's PowerFeed subscribers, mining services. Chaikin Power Bars tells us that it is neutral. But over the past 6 months, the mining subsector has outperformed the S&P 500 by 11.37%. That's pretty substantial outperformance. However, now we are in a neutral position, an equal number of bullish and bearish stocks. Industry ranked 12 out of 21 subsectors, did move up one slot. What's interesting here is the indicative names all have very bearish power gauge ratings. So given this outperformance here in the mining sector over the past 6 months and now in neutral positioning, might be a good idea to take some profits in names that have done well, maybe move to a more neutral weight for that industry group. Let's take a look at one of the indicative names here. Royal Gold, very bearish power gauge rating. Trends are weak, industry weakening. We can see the stock here has been consolidating in the kind of 80 to 90 range and around the long-term trend line. Let's look at the power gauge. We know it's very bearish. However, the stock has been outperforming and is currently oversold with positive money flow. So kind of a mixed message here. Lines up with the neutral view that we're seeing from the power bars for the industry. Kind of not one that looks all that compelling to me. Given the very bearish power gauge rating, I would probably skew to the negative side. But tactically, with the stock being oversold, now is not the time. Kind of a do nothing for me here. I know that's not what people want to hear, but that's the facts. That's what we have to trade. Our earnings update, Thursday surprises. Vulcan Material beats by 22 cents. But, I mean, that's pretty substantial considering they reported 44 cents and beat by 22 cents. They essentially beat analyst estimates by 100%. That did drive the stock higher, as well as material stocks. Motorola Solution beats by 22 cents. Cigna, within the health insurance space, beats by 74 cents. Regeneron, big miss, missed by $1.10. EOG, another resources name here, beats by 18 cents. That obviously helped drive strength in materials. Today is Friday. The Friday earnings calendar does tend to be light. I am curious to see what CBOE has to say, given all the volatility in the market. CBOE is a big big spot for futures traders as well as options and volatility traders. However, Chaikin Analytics does suggest caution when holding bearish stocks ahead of earnings. So let's keep an eye on what they have to say before the open. As I said, we would take a closer look at how the SOX was performing. These are the semiconductors relative to the S&P 500. What's interesting here is we've been consolidating since the fall, this relative relationship. Semiconductors are becoming more and more pervasive throughout the economy. If you think of autonomous driving, if you think about your appliances, if you think about smart TVs, it really does go beyond just the phone that's in your hand. Semiconductors really have become a solid indicator for the market and the economy. In fact, there's over a 90% correlation between the SOX, the semiconductor index, and the S&P 500. I like to look at how it's performing relative. So as I said, we've been consolidating since last fall, taken out the 200-day moving average recently, but regained it looking at price-based support here. If this relationship breaks down in a meaningful way, that would give me pause on the market in general and lead me to believe that the market was going to break through those support levels that we've been highlighting. However, we are holding firm so far. We're still in a consolidation here. Market's in a consolidation, does line up. Ratio kind of closer to oversold than overbought. So we'll see if we can continue to work higher and break to new highs. That would have bullish implications for the market. However, a breakdown, as I said, would have bearish implications for the market. I watch this relationship every day. It's one of my main screens, and I will continue to do so. So as we kind of wrap it up for the day, I want to remind everybody you can receive Chaikin PowerFeed for free by going to www.chaikinanalytics.com/PowerFeed TV. You can get these profitable, powerful stock ideas delivered right to your inbox every day. That's www.chaikinanalytics.com/PowerFeed TV. Happy Friday, everyone. Have a great weekend.